Have you ever borrowed money from someone? And did you promise to pay it back in time and, to say thanks, invited the person for dinner? A bond is an IOU given by the borrower, the issuer, to a lender, the investor, plus interest. On the bond market, promises, that is, bonds, can be bought and sold. Corporates, governments, banks, central and commercial, and supranational organizations all make use of the financial system. The primary goal of the bond market is to provide long-term funding for public and private expenditures. The global bond market is an estimated $78 trillion, with 44% of the global bond market. The United States dominates it. In the last decade, China's bond market has grown from virtually nothing into the third largest in the world, after Japan in the second place. Earlier this year, the United States Federal Reserve announced that it would raise interest rates now that the American economy is doing better. They said it would happen in September, and then they pulled back at the last moment. They said they had concerns about the weakening global economy, especially China and Russia, disappointing exports and the low US inflation rate. When it will happen now remains unclear. For the Asian bond markets, the prospect is a reason to get nervous. Higher US interest rates could put additional pressure on their economies. An increase in US interest rates could also lead to investors pulling their money out of Asian markets, as US bonds will become more attractive. All in all, the Federal Reserve's plan will have a disruptive effect on the already fragile Asian bond market. Not knowing when it will happen makes it all much worse.